Hello, welcome back to Tab U. My name's Katrina. I'm joined with Kobi from Tab and Asif from Acclivity. We're back once again with the top 5 questions you've been asking, this time on accounting. Would you guys like to introduce yourself, Kobi?
Yeah, hi, I'm Kobi from Tab. I'm the Chief Strategy Officer, and that means I'm responsible for legal, compliance, operations, a whole raft of things.
And Asif?
Hi, I'm Asif, Managing Director at Acclivity Advisors. We are an advisory and accountancy practice for entrepreneurs and their companies.
Great. So let's kick things off with question number 1, which is, what is accounting?
What is accounting? Okay, so I think I tend to think of accounting as slightly multifaceted. So on a very basic level, accounting is really just taking a record of your transactions on a day-to-day basis so that you have a reliable source to track where you've spent money, where you've received money from. But that's on a very basic level. The next level up is that all of those records need to translate into a compliance requirement, which is enforced upon an individual or a company from Companies House, or HMRC as the tax authority in the case of the UK. So your accounting really needs to translate into comply with legislation that's been enforced from authorities. But really where you want your accounting to get to is to a point where it is informing your decision making. So the compliance is sort of like a positive outcome of the record keeping, but really where you want to get to is a point where it's actually helping you make strategic decisions in the future.
So what do you do? What's like day to day? What's your role?
Yeah, so my role is slightly different to what everyone else maybe does in the company. We provide pretty much full stack compliance and advisory services to our clients, and that ranges from helping them with possibly their bookkeeping, though many of our companies are maybe slightly further along the line and have finance departments where they do that. But we help them make sure that not only are they compliant from a accounting, VAT, taxation perspective, but that also we are providing them with management information that they can use for their management meetings, board meetings, investor presentations, whatever it might be. But that starts with making sure that they are completely compliant and meeting their compliance requirements.
And in general, do all accountants, well, they obviously don't do the same thing if you do something different. So what kind of other things would other accountants do?
Yeah, no, it depends. I think the industry is sort of slowly converging into everyone roughly doing the same things, but we have a niche insofar as working with mainly entrepreneurs, typically technology entrepreneurs, and then typically institutional venture capital backed companies, and so they have a specific requirement from us. But generally, most accountancy practices will at the very least do and assist with compliance requirements. So helping with things like VAT, payroll, accounting, filing at Companies House, filing at HMRC. And then you have various niche companies who do all of those things, but maybe for a niche subsector, and then those subsectors have further requirements. Like in our case, we might help with reporting to a venture capitalist, or we might help with FCA filings, for example, if that's something that is relevant for a particular company. But not every general practice can necessarily be assumed to do those things.
And before we round this question up, why do we have accountants then? Is it the compliance reason, or is it?
Yeah, that's a good question. Yeah, I think.
What's your purpose?
Gosh, yeah. You don't want to go down that rabbit hole, but no, I think that's a good question, and I don't think people often know the answer to that question. It sort of starts off as a bit of a comfort blanket, so they just assume that if we're working with someone who's qualified in these matters, where entrepreneurs or whoever it might be may not be. So it gives them a comfort blanket that, look, ultimately I have a compliance obligation, and I want to make sure that the person who's most qualified to help me with that is engaged to help me. That's fine on a very basic level. I think that's a good enough reason to engage with an accountant. But ultimately it should be to get to a point where that person becomes effectively like a trusted advisor to your business. And hopefully they can help you learn in a way where some of the more basic things come naturally to you rather than something that you're outsourcing out of fear.
Great.
Which is such a neat segue into question 2.
Oh, really?
Yeah, exactly. So question number 2, What are the basics of accounting?
Right, okay. Well, the basics of accounting are that ultimately everything needs to translate into a deliverable to someone and somewhere. I think all of your record keeping and your bookkeeping need to eventually translate into what are known as financial statements.
And what are the differences between record keeping and bookkeeping? Are they this, like, for kind of our listeners who don't necessarily know or have heard of it?
Yeah. So, well, I think of those as slightly different things insofar as record keeping is just what I suppose anyone would do without any kind of motivation behind how they're kept. So maybe just a spreadsheet, or if you keep physical documents for whatever reason, you do. But in my mind, bookkeeping is the translation of those records so that they meet the standard and requirements that they are meant to meet eventually. So whether that's from a tax perspective, now there's various legislation that HMRC has imposed upon companies as to things like what is a deductible expense versus what is not a deductible expense. In my mind, bookkeeping is the translation of basic records into records that meet those standards.
So record keeping almost comes before the bookkeeping, and could just be the keeping of receipts, and then going, this is expenditure, this is refund, I don't know.
Yeah, I mean, like, for example, things like holding onto your documents and things are a legal requirement, and someone that doesn't know how to get from that point all the way to how do they get filed at Companies House, they may well just hold on to those documents for their own purposes. But a bookkeeper, typically, or an accountant, will help translate that physical box of documents into something that actually HMRC and Companies House will accept.
And what are some examples of some basic terms or concepts that our listeners, most of whom are investors, should be aware of?
Yeah. So as I mentioned earlier, I think the ultimate deliverable for an accountant to produce is a set of accounts or financial statements. And financial statements on a very basic level are made up of what's known as a profit and loss account, which loosely translated is how much money did you earn versus how much expenses did you expend, and therefore what are you left with as a net position, a profit or a loss. Hence the name. And ultimately what that gives you is an indication of your trading activity. So on a nuts and bolts level, does your business make more than it spends, or vice versa? And if it's vice versa, then why is it vice versa? Is it something because you're a very early stage business and so you're having to spend more in things like advertising, et cetera, to get your business off the ground? Or is it because there's something fundamentally wrong, as in you're buying something for more expensive than you're selling it, in which case it gives you a very quick way of making a decision. The second is the balance sheet. So the balance sheet is effectively a statement of what's known as the financial position of the business. So a statement of your assets and liabilities. So those are effectively at any point in time just a summary of what the business owns in terms of resources to actually create a business or do a business in the first place. So that might be things like physical equipment, IT equipment, or whatever it might be, depending on the industry, and a statement of your liabilities. So who owes you money, or who versus who you owe money to give you a net position on what the value of your business is. Are you worth a positive number versus a negative number based on your current position today?
So the kind of financial statements might not necessarily. Do you need financial statements and the balance sheets to get you a valuation of the company, or could you just use one or the other? Or
so the balance sheet forms part of what's overall known as the financial statements. So the financial statements are the P&L and balance sheet on a very basic level. For larger companies, that requirement extends to other statements also. But the valuation of a business is I suppose a separate conversation, insofar as there are various ways you can value a business. And it depends on your sector as to what's sort of known as the industry norm for valuing businesses in your subsector. So some businesses are valued on a multiple of their profit, for example. Some businesses are valued as a multiple of their revenue. Other businesses more basically are valued on just what your balance sheet number is. So, whatever your balance sheet is, they'll just assume that to be the value of your business.
And then kind of going back to the basics of accounting, we've got financial statement, balance sheet. Kind of what other elements might we need?
Well, you mentioned profit and loss. Was there anything else, or do you think that's it?
So I mean, in terms of statutory requirements, those are really the only two that most small companies will be obligated to file. But for the most important statement that I think people should try and get comfortable with is what's known as a cash flow statement, which translates everything that's happening into your business with really how the cash is moving. So if I show you your profit and loss account, and earlier I mentioned, then that shows you effectively how much money you have made versus you've spent. That doesn't necessarily translate into how much cash has come in and out of the business as yet, because that is very largely dependent on how efficient you are as a business. So to give you an example of that, if I was to raise an invoice to you for £1,000, and I only spent £100 in whatever it was that was a direct cost in delivering that service to you, for profit and loss purposes, I've made a £900 profit, which optically is a pretty good situation to be in. However, if I'm really bad at collecting money from you, for example, I have no processes by which to follow up, and or for example, I had to extend payment terms to you because of the nature of the business of 90 days or 120 days, my cash flow statement will not mirror that optically good situation that my profit and loss account is showing. So for small businesses, even though it's not a compliance requirement, we always advise that companies have some way of tracking their what's known as a cash flow statement. Larger companies have that as an obligation to file as well. But that's, I suppose, a good foundation in understanding how profit and loss can give you a very different picture to what the cash flow statement will ultimately show you.
So basically time is the key factor.
Correct.
In that. And I guess then the follow-up question then would be, how far forwards are businesses looking?
Mm-hmm. Yeah.
I mean, I guess the bigger the business, the further forwards you look.
Correct.
But
yeah.
I mean, could you just speak a little bit about what that looks like?
Yeah. So again, as you mentioned, it depends on the stage of the business. So larger businesses have more predictability and therefore more forecasting ability. When you are a smaller business, as I suspect many of your viewers are, it's harder to know, what is a reliable number to put for what's going to happen 12 or 24 months down the line. And so really, and to be honest, I'm quite straightforward with clients, and to say that anything beyond 12 or 24 months is really fantasy in a small company, unless you have some data points to say, this I know is going to happen in the next 12 or 24 months. But yeah, larger businesses, I would say, probably forecast up to 5 years. Smaller businesses, maybe 12 months at the maximum.
Cool. That brings us on to question number 3, which is, what are the steps to becoming an accountant? Needed a little bit of a cue there.
Yeah, that's fine. So, well, I suppose an accountant, we have to define what an accountant is in the first instance. I mean, an accountant really is anyone that can reliably do all of the things that I mentioned earlier. So if someone has the ability to prepare these, to help businesses and prepare these compliance deliverables in an accurate way, by definition, they are an accountant. But really, when you get to the point where you're dealing with slightly larger organizations who need a qualified accountant to help them with their work, that's a slightly different process. So, for example, in my case, I'm a chartered accountant with the Institute of Chartered Accountants in England and Wales. Now, to become a chartered accountant, you need to go through a period of training with a firm, typically a larger firm, not always, who will employ you on effectively a training contract, a bit similar to lawyers who get jobs on a training contract. And what that enables you to do is go through a period of typically 3 years where you're doing exams and gaining experience at the same time. So I think I did something like 15 exams over 3 years with at the time PricewaterhouseCoopers. And at the end of that process, you become a chartered accountant. And then it takes a couple of years of post-qualification experience for you to be able to then obtain what's known as a practicing certificate. So if you want to go out and actually advise people in your own capacity, as opposed to under the banner of a bigger organization, it's probably a subsequent 2 years to get a practicing certificate.
And is it at that point that you're chartered, or you're chartered when you finish the 2 years, or how does that work? And what does it actually mean to be chartered?
Yeah. So you're chartered at the point at which you finish your exams and you've completed your mandatory hours or days or whatever it is. So, and you could be a chartered accountant within a large organization. it's only at the point at which you have obtained the subsequent experience that you can then go and do that in your own capacity, rather than under the liability cap of a different organization.
Understood.
So, what does it mean to be chartered? That's an interesting question, and I'm not sure people normally find out when they're faced with a requirement for only a chartered accountant to be able to sign a particular document. But ultimately, I think where the chartered accountant label is landing is there is an element of trust that this person has gone through a certain level of experience and has to sign up every year to a certain minimum standard, at the very least, of a code of ethics and compliance requirements with their own institute, to say that they are operating in a technically strong and ethical manner. But largely also, many organizations will only accept accounts or undertakings from an accountancy firm or an accountant that has the requisite qualification. And so that's where that distinction between someone that is just very good at getting the job done versus someone that can do the same job but with a chartered banner.
And do you need to? I've always thought accountancy equals maths, equals numbers. Oh,
Guys,
fall asleep.
good
So
thing it doesn't.
do you need to be good at maths to be an accountant?
I mean, clearly no. But no, I think it's not so much maths that you need to be good at. I mean, I think in 2021 there's very little, I'd like to think, just physical maths that's being done by accountants. But you need to have an appreciation for how all the moving pieces work and connect to each other. So for example, to go back to the scenario of the profit and loss account and the balance sheet, they all have equal and opposite effects depending on what happens. So if you make more money, that means you have more cash, and so both statements interact with each other, and you need to be able to logically work through what the impacts and effects of everything that the business does is and are. And that's a slightly different, that's a sort of mathematically rooted capability, but thankfully it's not maths. Yeah.
And kind of a bit of an interesting question, I guess, is what's the most unusual thing you've come across when kind of looking at the books and doing the accounts? Have you kind of suddenly gone red flag, or oh wow, that's interesting, like £200 here? I don't know.
Yeah, no, you do see I do see interesting things all the time, and it's all through various scenarios that people end up in with these interesting situations. But a lot of the time, for example, it's not always the client's fault where an interesting situation has created itself, because the legislation is not easy to navigate, and I have a theory that actually a lot of the reason that the industry is actually propped up is because of how complicated the system is to navigate through, which I don't actually fundamentally agree should be the case. But there are circumstances where, for example, people will receive an investment from an investor, and we will for the first time see that in their profit and loss account. So, for example, they will have treated that as income, as if it was the same as revenue from a customer. And you don't necessarily, as in our position, we double take on a situation like that, but you can kind of understand when you've explained things on a very basic level as, here is your income and expenses statement and here is your balance sheet, why people have just thought, okay, well, if I've received £100,000 of investment, that's income. And so there are things like that present themselves every so often, which is interesting. But where we are right now is slightly further down, I suppose, the business life cycle with most of our companies. We see interesting things all the time with venture capitalists, for example. The way they structure their investments sometimes is interesting, and can affect the company in various different ways. And so we need to advise at that point, what the optimal solution for them is. So
do you think that all accountants need to be commercial?
Yeah, on some level, yeah, I think so. On some level, it's difficult for an accountant to be truly helpful if they've never really operated a business themselves. Now, arguably, you could say they're running their own practice, and on some level, that is a business also. But I think that primarily the best trait an accountant can have, other than being technically strong, is empathy, and to truly be able to relate to what it is that their client is going through, because for what it's worth, the compliance is an obligation. It's not really value adding to anyone, really. But having the empathy at the very start is really only possible if the accountant has been through similar experiences to what the entrepreneur is going through. So yeah, sorry, I kind of lost the root of your question, but
No,
I think it sounds
yeah.
like roughly that's what it was.
No, I think that's it. But, having an understanding of
Yeah.
the commercial realities rather than just the technical expertise to
Correct.
be able to give you the P&L, the deliver the accounts, whatever it may be.
Yeah, no, particularly with in the sort of niche that we operate in, which is early stage tech businesses for the most part. Everything about their financial statement says that they should not be in business.
Right.
Right. And maybe a more traditional accountancy firm would advise that, to say, what are you doing? You lose money all the time. Why would you bother pursuing this? But you have to have seen that model work to encourage people that actually it doesn't look great, but here's some of the glimmers of hope that we can hold on to, and here's what we should pursue, and here's maybe a backstop to how long we can let this continue, kind of thing. And you provide, because the entrepreneur always knows, right? It's like they always know what situation they're in, and the last thing they need is their advisor to remind them how bad it is. You need to have the commercial awareness and the empathy to be able to sort of know what mindset they're coming to you with, and be able to translate that into something that's going to actually help them, rather than sort of just make them realize that you realize that they're in as bad a situation as they are.
And you've talked about technical skills. You've mentioned sort of empathy, and obviously we've spoken about understanding the commercial reality of the situation that the client finds themselves in.
Yeah.
What other skills do you think are needed to make a good accountant, a good advisor?
Yeah. So I think that one thing that we try and do quite a lot of. There's a couple of things actually. Is at the very beginning to make sure that you are the right accountant for that client, and that's a hard conversation to have a lot of the time, because in our case, for example, we get the majority, if not all, of our work by referral, and so there is an element of trust and expectation that comes with those kinds of introductions. But it's just not the case that every advisor is right for every client, and unfortunately, it's always the client that finds that out the hard way. After 12 or 24 months of working with an advisor that really just doesn't understand their sector or their growth plan or whatever it might be. And so at the very beginning, I think it's important for the accountant to be able to have that transparency with a client, to say, we either are or not the right company to work with for XYZ reasons, and here is someone that maybe is the right company for you to work with. So transparency, I think, on the early stages is definitely a trait that accountants should have and should foster. But also then just along the way, making sure you have the ability to teach entrepreneurs and take them from where they are to where they need to be, so that they have the ability to ask you better questions. And so we're sort of huge on that. We will always at the very beginning of every relationship say, here are all the things that we possibly could do for you, and here are 50% of those things that you could do yourself if you're willing to learn them from us, and then you don't need to pay us to do them. And that's always kind of met with a what's the catch kind of reaction. But ultimately, we just don't want to be in a position where we're charging people for things that they could do themselves. And some people turn around and say, I know I could do that myself, but I want you to do it because I don't have the time or whatever. And that's fine. And it's done and it's dealt with. But where clients have embraced that sort of mantra of working, instantly within 12 months, your relationship is just so much more value add, because, you're not wasting that airtime on talking about effectively basic things which really anyone could do.
Yeah, because I was going to say that's quite counterintuitive for a professional services firm. You're not in the, forgive me for saying so, in the helping industry,
exactly.
So, obviously like a doctor or a therapist, they don't want to see their customers again.
Yeah.
But I hear what you're saying, that if you can give them the basics, then you're not doing the basics.
Exactly.
And then the stuff that you are doing is, as you say, greater value add.
Yeah. And ultimately it's just all about, you're really only ever going to get the questions answered for the questions that you ask, right? So if you are not improving your process by which you are asking questions, then really that's testament to, I suppose, what your journey is going to be like as an entrepreneur. So, I think there is only so many hours in the day, there's only so many days in the week that we can interact with every individual client. If that time is going to be used discussing, what VAT rate do I use for this Costa receipt, for example, that's an opportunity where we could have been having a conversation about, how do I open my own Costa or whatever it might be. And that's a slightly simplistic example, but even still, you get the idea. And a lot of entrepreneurs are receptive to it. Most entrepreneurs will just say, I simply don't have the time to learn about these things, and so I'm happy for you to do and charge whatever it is you charge to do this. And then what we do is land at a sort of halfway point where we say, okay, if you don't want to do it and we don't think we should be doing it, then let's try and automate it as much as possible, because there's so much reasonably priced software out there to automate a lot of legwork.
Cool. And question number 4.
Sure.
When would I need an accountant?
Yeah.
If I could just frame this, because that's a broad question.
Yeah, that is a broad question.
And I think, look, we know that the people listening are either investors or interested in investing. And so I guess what would be useful to hear from you would be, in one, as a property investment context, and then 2, maybe in a broader, more general investment context.
Yeah. Okay, so depending on whether you are an individual or a company, I suppose that the thought process is roughly the same. But effectively, when you really need an accountant, I would suggest, is when you're thinking about starting your investing. And the reason for that is because it seems counterintuitive to engage an advisor when you've not done anything yet, because what do you really need advice on? But it's important to make sure that you don't end up starting something that becomes irreversible or becomes so inefficient that you've blown a lot of quite precious capital at that point. And to give you some examples of that, there are situations where, in a property context, people will buy a property, and they'll buy it maybe in their own names, and they will buy it with a view to building a property portfolio. And that may well be fine for their specific circumstances, but it's not the right and most efficient outcome for everyone. So whereas for the first individual, that may be the perfect structure, for the second individual, it may well have been a better idea for them to have purchased that property in a company, because of what their plans are, or because of whatever their structure is, and all of that sort of thing. Now, by the time they've bought that property, it now becomes almost not irreversible, but very expensive to fix that problem. So, it's useful to have some advice at that point. So I'm thinking about investing, or I'm thinking that I'm going to play out this strategy, or whatever it might be. On a more nuts and bolts level, you ultimately need an accountant when you need to begin declaring and filing income and profits and gains and whatever it might be. So for an individual, that will probably look like assistance with filing your tax return. So for calculating capital gains or calculating income on rental, whatever it might be. And tax returns are due by the 31st of January every year. So it makes sense to have engaged with an accountant beforehand to make sure that you have adequate time to get registered and all of those things. And for a company, again, you may actually even just start engaging with an accountant at the point that you want to set up your structure. So to conclude on that, I suppose the best way to think about it is it's probably earlier than you would have expected to. So if you feel as though you're about to embark on something, it's always useful to get that advice early.
And would there be any differences? So, lots of our listeners will, have some spare capital and be thinking about investing. They might be looking at some TAB products, which is, the equity or the debt. They might be looking at doing a property investment themselves. Other people might be looking at, the stock market or, another sort of financial product that's not property based. Are there key differentials when you're looking at those different types of investments when it comes to speaking to an accountant?
Yeah, I think there can be. So if you are a property investor, I think it's almost worth speaking to an accountant that has property experience, because it's a topic on its own. There are structuring strategies that not every accountant will be familiar with. And similarly with if you're investing in equities or cryptocurrency or whatever it might be, not every accountant will have seen or had much experience in efficiently advising. I mean, they'll help you say, ultimately, I've deduced you need to file a tax return, and every accountant can do that. But truly, where you're looking for advice, it's worth going to an accountant that has sector knowledge of that specific industry.
Cool. And going into our last question number 5 is, what information do I need to provide an accountant?
Okay.
Let's say I've got you in at the right time, just early enough. There's a couple of months before my tax return is due.
Right. So
is that long enough?
Yeah, typically it can be fine. Depends on how complicated your tax return is, but
Very.
But essentially, you need to provide your accountant for tax return purposes with a summary of all of your income and expenses and any profits or gains you may have made across all of your involvements. So if you're running all of these things concurrently, so you may have employment income, and so a summary of your employment income in the form of things like your P60, any pension contributions you may have made, and then alongside that, where you have made extra income or gains, you need to have a summary of exactly how much income you made, what the direct costs against that income were, and if you have things like equities and you've bought and sold shares or you've bought and sold properties, you would need all of the details surrounding those transactions. So how much you purchased those things for, how much you sold them for, what the costs were again associated with those. And an accountant's job is really to assimilate all of that information and ensure that you are paying the most optimal level of tax against all of the outcomes of your trading activity.
And how angry would you be if I just printed out 34 pages of my bank account and said, here you go?
Yeah, that probably wouldn't work for us. At the very least, at the point at which we engage, we'll always sort of advise clients as to how we would like to see their documents at the end of the year. And that's typically either through a spreadsheet or linked to a software that they might be using. But having just a sort of print out the bank statements is probably a 10-year-ago problem.
Cool. Well, that wraps things up for today's podcast. Thank you, Kobi and Asif.
Thank you.
It's been really good to have you on. Hope you've enjoyed it, and I hope our listeners have found it useful. Don't forget to subscribe, like, and share. And next time we'll be talking about care homes. See you then.